Greg Mannarino, a widely famous trader who shares his end-of-day notes with viewers and visitors of his website, is fuming over the fake bull market. Now that the Federal Reserve is selling bonds, raising rates, and suffocating liquidity, we're seeing a horrible 2018. This proves how insane central bank manipulation has become. Portfolio Wealth Global wants you to prepare, anticipate, and act on these market signals. Go to portfoliowealthglobal.com/bear to get 11 proven strategies for the gold bear market. Go to portfoliowealthglobal.com/attack to see how America will regret abusing the dollar.
Welcome to the Leaders of Tomorrow show at portfoliowealthglobal.com. My name is Michelle Holliday. Our guest today is Mr. Gregory Mannarino. Greg is the founder of TradersChoice.net. He is one of the most popular traders on YouTube. His market recap videos are viewed by thousands of people on a daily basis. He shares his insights, specific trades, and more. So we wanted to get an exclusive with him to cover the market analysis, his opinions on what constitutes good investments today, and to get his usual honest, no-nonsense approach to business and to life. Greg, welcome to the show. How are you today?
I'm great. Thanks for having me here. I really
appreciate it.
It's
Amazing to have you. I'm so excited. Greg, in terms of importance, from your perspective, please rank the following topics: rising interest rates, midterm election results, trade wars with China, peak official unemployment going nowhere, meaning just going up, the wealth gap, and the S&P 500's October month of rattling.
What do I think is the most important of this? It's pretty straightforward for me. My eyes are glued always, every day, all throughout the day on bond market action. I want to see where yields are going. That's going to dictate for us what the trend is, has been now for an entire decade. As long as these rates are being suppressed, pretty much nothing else is going to matter. The environment of risk is going to be maintained. I mean, that's been the game now for an entire decade. It's ridiculous. It's created unbelievable, literally, off the Richter scale, distortions in this market, every aspect of it. There's no real price discovery mechanism behind the darn thing you want to look at. But it's a game that, because of understanding this, it's easy to beat. So that's what we're going to do until we can't anymore. And I don't see it changing right now, despite market volatility, what's going on here, all these gyrations that people are just not simply used to. The midterm elections was a non-event. I explained to everyone how it would play out exactly. I was right. I told them how the market would react. I was right. Sometimes I scare myself. It's true.
Right. You scare everybody. That's why I'm so excited to have you here. It's just amazing. I love to listen to your stuff. Now, PortfolioWealthGlobal.com's bond expert is alarmed at what he called the yield extermination, the beginning of a 10-year higher rate environment, which will kill bond holders. And for our viewers, we've prepared a special free report for you going to portfoliowealthglobal.com/bonds. Now, Greg, what role do you believe that the central banks have had on this bull market? What do you think would have happened to America and also to the entire global financial system itself had the market forces been allowed to play out in the 2008 meltdown?
All right. Well, let's start at the beginning. I guess let's start at the 2008 meltdown. It's pretty simple here. When the markets melted down, the big issue that people forget was occurring was we were getting a credit freeze. And that was huge. In other words, transactions were not going to be taking places between businesses. Banks couldn't lend. So the Fed had, I'm going to say something again that I've been taking heat for years. And that is, I believe that that action did need to be taken at that moment. Again, they had to do something to unfreeze the credit market. So this was QE1. Okay. Now, in my view, they should have stopped. That should have been it. Once the credit markets opened up, cash started to move again. That should have been it. what the market was attempting to do was correct distortions that were existing in the market at that time. And it maybe got a little bit out of control. There's a lot of panic here. But when we witnessed world central banks now, and they were all doing the same thing in unison, buying everything in sight, propping up the markets via the debt market, it started to become a drug that the markets became addicted to, and still are at this point here. So we hear about all this nonsense about an aggressive Fed, and the Fed should not be raising rates here. People need to understand that all this has done is create distortions, which are much worse, in my opinion, than the last time here. But QE1 needed to happen simply to free up the credit markets. And I know people are going to respond negatively to me saying that, but what they're not understanding is if that did not happen, they would not have access to their own cash. It would have just stopped. So we needed to stop the bleeding. That's where they should have stopped, in my opinion. Let the market correct itself instead of creating an environment of risk, which has literally punished savers for an entire decade now. These artificially suppressed rates are hurting the middle class while we've inflated a bubble in the stock market. That's it.
Wow. Now, speaking of the QE, in the past few years, we've learned that the QE does not equal inflation on an immediate basis. In fact, we've seen precious metals in the bear market since 2011. And Tom Beck, the founder of Portfolio Wealth Global, has been investing in select mining companies for years. He's actually produced 2 critical reports for our viewers. Everyone can go and get them for free at portfoliowealthglobal.com/goldplaybook and portfoliowealthglobal.com/bear. That's BEAR. These are amazing reports. They're absolutely free to everyone. Greg, turning now to today's America, where does it go from here? First, you foresee a major problem for the dollar. It's trading right now at 18-month highs. And for this year, in 2018, it's performed better than any other asset. What does the future hold for USD savings?
Well, I think for the dollar right now, we have to assume it's going to continue its upward trend. And I believe that's geopolitical events that are pushing the dollar higher. There's always this move into the dollar when things kind of heat up like this. So I hate to say it, but the long dollar trade has been right for a while. But again, I don't believe there's a way to stop what is coming down the pike here. And that is, we have a situation where our central bank has gone berserk. They've printed cash out of thin air on an epic scale, added to a digital screen on an incredibly epic scale. And we have all these extra bills out there in any form you want to look at. They're just floating out there, waiting to chase the same amount of goods at one particular time. And the reason why we're not seeing crazy inflation yet, and I believe it's coming, is because we're not seeing the money velocity or the rate at which cash is moving through our economy move up. We're still near historic lows here, but we're supposed to be in a great economic situation. I can't imagine how you can have a booming economy without cash really moving. And this is why we're seeing debts explode, deficits explode, why we have a Treasury Department which is now going to be issuing more debt than during the financial crisis. There's a lot of things here that just don't add up. So the long dollar trade, yeah, it's working for now. So is this fake market working for now. But it's an environment that's going to reverse. And how do we know that? Because we've seen it. The market runs in cycles, period. You get, risk on, risk off, risk on, risk off. We're in risk on right now. So just take advantage of what's in front of us. And this is what I say to everyone that follows my work. We trade the market that we have, period. We can sit here and speculate about what's going to happen down the line here all we want, and it may or may not materialize, but we are here now. Let's do what we have to do now And again, of course, understanding the cycles of the market, you should be betting against the debt. You should be becoming your own central bank. Understanding that this bullish dollar is going to reverse along with everything else. It's just a simple cycle of the market. But again, understanding where we are makes it even more simple to trade these markets, know where we have what we should be doing down the line a little bit here. And to me, it's just all common sense.
Right. Now, the US dollar, when you're talking about cycles, could you expound on that a little bit for us? I love to hear you talk about that kind of stuff. So
Sure. Well, again, people are strange entities. They kind of don't think about what may have happened in the past. And to see the future, all you really got to do is look at the past and understand that let's make this even more, esoteric in a way. Everything has a frequency to it. Even the sound of my voice, the sound of your voice, the radio waves, however this thing is making it into people's houses right now. It's all a frequency. So the markets as well operate on almost like a frequency pattern. So what we can expect is, you have bull markets, bear markets, bull markets, bear markets, and the same is going to happen for the dollar. The same is going to happen for the equity markets. But what makes this environment unique is we've never seen this. We've never been here before. I mean, there's no models for this. There's no dot plots. We hear from the Fed that they say, the dot plots are lining up. Are you kidding me? Are you really kidding me? Because we've never been here. There's no models for this, so they can say what they want. They never had any plan how to unwind all this, and they're never right. They're always wrong. We want to look back on history. It's that simple. So understanding that everything has a frequency or a cycle to it makes it easy to understand that at one point what we're seeing now is going to reverse. There's no doubt about it. Just look at the past, and people forget we do have a past. All of us do. The markets have a past, and they will have a future, however it ends up playing out.
That's very interesting that you talk about frequencies, because I'm a big believer in that too, that everything works together in unison. And so we're here at the first time in history. Do you think it has to do with a lot with what actually people's concepts of what the future is going to bring? Because the media seems to dictate a lot of that. And then a lot of times when fears come, you can actually see the market go, whether they're invested or not. So it's a really interesting concept.
Oh, it really is. Well, it's a lot of it is thought shaping. I mean, the media, what does the media do? It tells you, do this, don't do this. Oh, you shouldn't be thinking about that. You should be thinking about this. Look here, don't look here. It's always the same story. And this is not unique to where we are now. This has been going on since time immemorial. It's the truth.
It's really interesting, how a lot of people think that they have very strong opinions, and they don't realize their strong opinions have actually been created by not what they know, not what they've researched, not what they've experienced personally, but just what they've been told by the media. The media has a tremendous amount of power.
It's unbelievable. I mean, but seriously, the clothes I am wearing, would I be wearing these today if they were pushing some new kind of a fad? Probably not. I don't know. I'm old school, so maybe I would. But seriously, the media dictates everything, how we think, what we believe, what they want us to believe. But you got to cut through all that. I mean, right now, what are we hearing from today, as a matter of fact? You turn on any of the mainstream financial channels, they're talking about Hindenburg omens, they're talking about death crosses, they're talking about big lows in the market. When I hear that kind of stuff, I can't help myself. I swear to you, I have to think of the opposite way. The opposite. I got to go, okay, there are too many darn bears out here. That means I got to be bullish. And this is what I've done since forever. It's worked for me. Maybe it doesn't work for everyone. But again, what are they telling? It's fear. They're getting people hyped up. Why do they do that too? They want people to watch their channels. All this stuff going on. You better be watching so you know what's going on here. We got to cut through all that nonsense. Let's just understand that, there's going to be the freaks on this side. There's going to be the other freaks on the other side. And we're going to go right up the middle.
We're all freaks, and we just have to face it.
No one's freakier than me. That's the truth.
Now, for everybody, our special report that Tom's prepared for you to go in depth to the review of the U.S. dollar's biggest challenges is at portfoliowealthglobal.com/money. Now, Greg, we're going to switch gears just a little bit here. What is your general view of cryptocurrencies and Bitcoin in particular?
You know, well, first of all,
I'm very interested in this answer here.
you know, how do I put this? I wish Wall Street would have kept their long, ugly hands off of it. That's the truth. When Wall Street, started with the Bitcoin futures. I don't know how long you've been following my work here, but I outlined this for everyone, how it would play out, exactly what Bitcoin would do at that point. I wrote article after article at that time calling the price action of Bitcoin. It was an unbelievable thing. And I told, when it hit 18,000 or so, I told everyone, I said, dump it. I got ridiculed and laughed at on every website you can think about, crypto websites. Oh, Greg Mannarino saying this. Oh, no, Bitcoin's going to 60,000 within next month. I laughed at everyone. I really did. And like I said, I got ridiculed over it, but I was 100% correct. And ironically, some of these websites that were ridiculing me actually apologized. They said, Greg, you were right on this. But with regard to cryptocurrencies right now, and I've admitted this and I'll say it right here, I've lost my mojo with regard to being able to price these things. I don't know how to price them in this environment anymore. So I don't own any. I used to hold them all the big ones. I don't own them all at all anymore because, again, I don't understand them like before Wall Street got their hands on Bitcoin here. I don't like it. This was supposed to be a decentralized kind of, off the grid thing, but now that's all changed. And I think that unfortunately the price action of cryptocurrencies has entered the same rigged environment as precious metals have. So I don't know how to value these anymore. So that's all I really can say about it. I wish when I once again get some kind of mojo, I'll start talking about it. I don't talk about it too much because I don't think, again, I have the right tools in my box to understand it yet. Well, right now. Yeah.
It is interesting. Even JP Morgan is coming out with a cryptocurrency that's backed by precious metals. So you're going back again, basically, to the same thing that fiat is or was supposed to be until it became manipulated and went off the charts.
I don't know. We're going to have to see. We'll have to just see how that whole thing plays out. I mean, cryptocurrencies, all of them have been stuck in a range for a long time. What would it take to break them out of this range? I'm not sure at this point. Like I said, I lost my mojo here when it comes to this stuff. So it's just going to be one of those entities that we're going to have to see how it plays out. Are we going to achieve another high like that in Bitcoin in the not so distant future, like 20,000 again? I sincerely doubt it at this point here. I don't know what would cause a move like that to happen again. We'll see.
Wow. Now, to what extent do you see corporate buybacks as the major player in this bull market?
Well, that's all they're doing. They're all buying back shares of their own stock. Isn't it insane? Oh, yeah, my stock just got downgraded. You know what we're going to do? We're going to buy back another 1 billion shares of our stock. Isn't that going to be just great? I mean, it's another way of twisting this whole thing of, this is what companies do here to, I guess, make their shareholders happy. But what they should be doing to keep the market real is, let's say if they want to return cash, this is what their excuse is. Well, we're buying back shares of our stock so we can make our shareholders happy. But what they really should be doing instead of rigging the price via price buybacks is increasing the dividend. So, they know what they should be doing, but it's a game. It's all a game that they play. If they really wanted to help out their shareholders, they would just increase the dividend, let the market decide what the fair price is for their stock. But again, it's all part of this whole charade. That's all this is. It's just charade in front of our eyes. It's ridiculous.
It's a game, right?
Big game. It's huge.
Big game. Now, Greg, some very famous people have already called the top of the cycle in February, like Charles Mannarino. Others, like Jim Rogers, are saying that a huge rally which the retail public is joining, will push this bubble higher by another 30 to 40%. What are your thoughts about this?
Look, all I can say is as long as the environment of risk is maintained, and that's going back to what we were speaking about earlier, watching the bond market. If yields are suppressed, it just opens that door for more cash to flow into an already distorted stock market. So this is what we're going to see. And I will remain bullish until I see an uncontrolled sell-off in the bond market. When I see that 10-year yield start to rise along with the rising dollar, then I'm going to start to get worried, because there's going to be the initial knee-jerk into the dollar. Bonds start to sell off, yields will rise, and that's going to give me a clue that there's real danger ahead here. That's really what I'm looking for. So, it's just so simple to me to put it into those terms. Watch the bond market, specifically the 10-year yield. I think in this environment where we are now, again, we're trading the market we have. If we see the 10-year yield 3.24, 25, 26, with the dollar rising, this is going to be negative for the stock market. So action is going to have to be taken. There's going to be some entity that's going to get in here and buy up those bonds. Just like we're seeing today, we have a rally here going on in the bond market and a rally in the stock market at the same time. 10-year yield dropped. Yesterday it was 3.18. Right now it's 3.159, I believe. I mean, it's unheard of. You don't get simultaneous rallies like that, but this is the market we are in. It's laughable. And we watch the fake news get floated out there. Oh, there's going to be we're now Kudlow earlier today. Oh, we're now talking to China again regarding a trade deal. Well, hold on a minute. I thought we were already negotiating. We're talking again. So they can't even get their own story straight. You just got to pay attention to these people. It comes out of their mouth. It's just too stupid. And they float these stories out right at the right time when stocks are bleeding off. What can we do to pick up stock prices here? Well, let's float out a story and say now we're talking to China, but we were supposed to be talking to them already. But people, they don't understand. They don't pay attention to these things. They get strung along. It's too much. It really is.
Greg, this has been an amazing interview. It's so great to have you on the show. Please tell everybody about your website and your YouTube channel, and also please mention your books, because I understand that one of them actually got you banned from Las Vegas. That's how good you are.
That's true. That's a long time ago. Well, yeah. Well, first of all, my website, traderschoice.net, there's all kinds of free stuff. In fact, mostly everything is there is free for people. All the important stuff is free for people to use. All the charts there, stock screener, which I think is phenomenal. A technical analysis gauge for people that don't like to read charts is there. All kinds of great stuff. I hope people are taking advantage of it. But yeah, many years ago, I wrote a book on casino blackjack strategies. And out here in Vegas, where I live, they don't like that kind of stuff. They don't want people to know that the game of blackjack is beatable. It's a mathematical game. So I got banned from playing blackjack out here. I play poker now once in a while when I get some time. And I am a busy guy, so it's very rare for me to hit that strip over there, let me tell you. It's unfortunate. I need to open up my life a little bit. It's the truth. It seems like every year I say, hey, Greg, this year's going to be different. We're gonna cut back. It just gets worse. I'll tell you.
Well, that's saying something when your blackjack strategies get you banned from Vegas. I got to tell you. Yeah. What a predictor on the financial markets. Greg, thank you so much for coming on the show today.
Thanks for having me. Great.
Mr. Gregory Mannarino, founder of TradersChoice.net. For the leaders of tomorrow's show, I'm Michelle Holliday at PortfolioWealthGlobal.com.
Mark O'Byrne, who runs a huge Ireland-based bullion dealer, shares insights on his client preferences. Silver Bull, the famous Chris Dwayne, who mints his own coins, discusses triple-digit silver prices. Vortex, breaking down how the end of the crypto bear market will catapult Bitcoin to new, fresh, all-time highs. Jim Rogers outlines exactly how the crash will happen. And Charles Nenner on major stock market crashes and gold crashes. Portfolio Wealth Global continues to pound the table that this bull market is not over in stocks. In In fact, Starbucks, our latest stock profile, jumped from $51 to over $63 in no time, as it opens a new China branch every 15 hours. Make sure to subscribe to the newsletter as we reveal our picks for 2019. Go to portfoliowealthglobal.com/money now.